This is Trader Travis, and I have my partner and Prophet Peter on the line. We are here with another weekly recap, talking about the general market, some of the trades we're going to make. Don't follow our trades. Everything we're saying is for you'll see why I'm laughing here in a second. Everything we're sharing is for educational, informational purposes only. It is not to be taken as investment or financial advice. But I'll make Peter the presenter here. He has an admin note for you all, and then I will wrap up with my admin notes. I have just admin notes. I don't have many traits I'm going to place. But anyway, let me shut up. Peter, go for it.
Okay, so it's sharing my screen, but I'll bring my other stuff over. I just didn't want to. Can you see that?
Yeah. Yep, I can. Investors Business Daily. Yep.
Yeah. Okay. So I'm going to start by, I'll give you guys a quick apology for last week, because I think some people acted on what I said last week. I had mentioned, Travis and I were talking about it. I guess I had mentioned that I would get in on a green daily for SPY for a credit spread. And that was incorrect. I wouldn't get it on a green daily for SPY because there was already a red daily. So if some of you guys entered a trade based on what I talked about, I apologize, and I'm going to say shame on you. You shouldn't have been acting on what I said, because we always talk about this. Don't watch a free YouTube video and follow the advice verbatim from that free YouTube video. You got to do your own research. Take responsibility for your own actions and your own trade plan. For some of our members that may have done it, stop doing that. You guys need to understand, you guys need to make the decisions for your trade plans without any influence from Travis or I. We can give you advice based on our templates, but please don't place trade plan or create trade plans based on something we may have said in this weekly. To recap what I was talking about, I said green daily, I guess, but I meant to say green weekly. I use the trade templates, and I'll cover this real quick too for our members that know this. For those of you that aren't members, you won't know what I'm talking about. But if you go back to your credit spread template, the credit spread template it's got 4 steps. It's very clear what those 4 steps are. Determine your directional bias. It doesn't say use Market Club to determine your directional bias. It doesn't say use the PR template to determine your directional bias. It just says determine your directional bias. The reason for that is because if you go back through your training, you know that credit spreads, you don't have to be 100% right. You can determine, okay, I'll give you a good example. If I'm going to get in a credit spread, my directional bias is that we're in a bull market. It isn't a correction. It isn't a pullback, but it's still a bull market. It's not a bear market. So my directional bias is still bullish. So if I were going to get into a credit spread on, let's say, Coca-Cola, I would look at Coca-Cola and say, well, my directional bias for Coca-Cola is this. It's either bullish or bearish. For me, I trade in the general direction of the market. So market's a bull market, even though it's in a correction, it's still a bull market. So my directional bias would be bullish. My next step is then to determine what I'm going to trade. Well, if my directional bias is bullish, then I'm going to trade a bullish spread, right? So that's my next step. Then it's determine in the money, out of the money, at the money. And then it's to determine risk. That's a credit spread template. That's all it is. Now, I do use Market Club to do my credit spreads. And the reason I do that is because Market Club template gives me a much better chance of success. But I use it based on the Market Club template. Right now, the Market Club template is not satisfied because we have a red weekly. So if you trade it on a green daily in a bullish direction and it's not working out for you, that's most likely why it's not working out for you, because Market Club's templates is conflicted right now. It doesn't know what direction it wants to go in. Having said all that, if you did place a trade, don't get out of your trade based on what I'm telling you here now. Follow your trade plan. Just chalk it up to, okay, see what happens. Still follow your trade plan. And the reason for that is because if you get out based on what I'm saying now, or you exit your trade because of something I said, then you're allowing me to influence your trade, and that's going to harm you in the future. You'll then allow Yahoo Finance to influence your trade, or you might get in the car and CNBC is on and they influence your trade. So we don't want to trade on emotions. We want to trade on the best facts we have available at the time, and that's our trade plan. So the other thing I want to cover real quick is directional trades. And again, this goes more towards our members. If you are placing a directional trade, a call or a put, those are directional trades. A credit spread is not necessarily a directional trade. You determine your directional bias, but it's not a directional trade. You can trade credit spreads when its stock is flat. So, you don't, because the credit spread, you don't have to be 100% right. So because if you trade out of the money credit spread, and it's a bullish credit spread, if the stock happens to, go up a little bit in the beginning of your spread and then goes flat or even goes down a bit, your credit spread could still be profitable because it's not, you traded out of the money. You didn't have to be 100% right on your direction. That's why we don't consider it a directional trade. There's a directional bias, but it's not a directional trade. A call, you need the stock to do one thing, go up. If it goes sideways, you lose. If it goes down, you lose. It has to go up. That's a directional trade. So you're always going to want to follow your templates to the letter. And then the last thing I'm going to cover is just this stuff. So if you're using Market Club, so I have Market Club pulled up. Darn, I changed one of my things, but let's just, here's the SPY. So Market Club, if I'm using Market Club, it's telling me it's a -55 and we got conflicting signals. So Market Club's telling me the stock market, or SPY in this particular example, doesn't know which way it wants to go. So for me personally, I'm not placing any trades because I could place credit spread trades if I wanted to. If I wanted to, I could say, well, in the short term on the green daily and even over the long term on the green monthly, my directional bias could be bullish. So I could trade some bullish credit spreads. But with the market being so turbulent the last few years and never really knowing what it wants to do, I just rather wait for a no BS direction. And it's going to give it to me, because even if you go back 2 years, even if we look at a 2-year chart, Market Club, let me get rid of those dailies, Market Club has given us no BS directions. Here it gave us a no BS down direction, which if you traded on the monthly was wrong because the green weekly came in afterwards. But then it does give you, when it triggered this green monthly, no BS. That thing went up for many months until it triggered the green weekly and you would have gotten out. You could have traded a short bullish or bearish position here and you would have been fine. And then you would have gotten out of those bearish positions here. You could have gotten back in here. So you can see Market Club still gives you good signals. And our last monthly has been right on. The stock market's been going up since that last monthly with a pullback here and a current pullback. But as we know, the market does this all the time. If you use Market Club and IBD, you can get into some conflicting information. Right now, they're in the pretty much the same category, right? Market Club is giving me, hey, it doesn't know what it wants to do, and IBD is telling me, hey, the market's in correction, so we don't want to do any bullish positions. But you could go to Yahoo Finance and say, hey, our small cap stocks that are badly lagging the S&P 500, is this a warning sign? So again, now you're getting into, when you start reading stuff like this, you're starting to get into trying to predict what the market's going to do. And we always tell our members, we don't try and predict the market, it doesn't care. Last point I'll make, look at this on IBD. Market's in correction, but look at what this says, bull market. Stock market pounds the bears as Trump delays tariff date and the gold hesitates. So what's that telling you? Now you're even more confused, right? I thought we were in a market correction. Now we're not. Well, we're still in a bull market. So this is why I don't use these things. I use IBD solely to get my hot stock formula and stock prices, or my stock list, and to check on fundamental analysis. I don't really pay attention to this stuff. Yahoo Finance, the only time I use Yahoo Finance, and I don't use them as much because I don't like their negativity, because they are a very negative site in my opinion, but I'll use them for their charts and graphs because they do have some pretty cool charts and graphs. But Market Club is really my go-to. That's what I use the most. And then last but not least, the other thing that I still maintain is just knowing how to do this stuff through my DMA template. So I can bring up, I think I have my PR template loaded right now. So I can bring in my DMA template and just use the basic moving averages. And right now, the moving averages are saying, yeah, we're probably headed down or maybe sideways. The long term is saying, hey, we're kind of going up, but I can use this and just determine that, all right, I don't want to be in any positions. So that's it. That's the gist of what I wanted to cover. Again, I apologize for what I said last week about the green daily, but if you traded based on that, that's why we tell you trade alert services don't work. And that was a perfect example. If you used my my last week's statements to get into trades and those trades aren't working out for you, well, I'm sorry, but we tell you don't listen to us from that perspective. I'm just telling you how I'm thinking for the day, right? You don't see my whole trade plan, and there's a reason for that. You don't see it because I don't want you to learn based on me. I want you to learn on your own. In other words, I want you to come up with your own trade plan. Use education to learn how to do that. But don't come up with a trade plan based on what me and Travis talk about on our weekly recaps. I guess that's the best way to put it. Oh, and last but not least, just remember, I don't know if you were going to cover this, Travis. This is our last weekly recap for a bit. Because we do have.
I didn't even write that down, but yeah, thanks for remembering that.
Yeah, so I don't remember when we said we were coming back, but I know
the week of September 9th, we're going to meet sometime that week, but the week of September 9th is when we'll start our recaps again. So let me actually write that down. All right, week of September 9th. All right. Yep, so we're going to take pretty much roughly a month break, our summer break, plus Peter and I will be traveling and doing different things. So this is our last recap for the next month. All right, so that leads to my next admin note. And because we're not meeting for a month, what I'm going to do is re-release price point profits.
Thanks to me.
Peter's been teasing all our members for it. So Success Academy members only, because it only applies to you because you know the strategy that makes it work so well. I'm going to re-release that next Wednesday in place of our weekly recap. Okay. Huge admin note, same admin note I gave last time I released it, so don't get crabby with me, but it's a unadvertised bonus and it's a time sensitive bonus, which means that it's only going to be up for 2 weeks. Here's the criteria. It's only up for 2 weeks. Take plenty of notes because you can't download it. And then after 2 weeks, it's coming down. Third is coming down, and it probably won't be back up for another 2 years, right? So those are 3 things. It's up for 2 weeks. You got to take plenty of notes because you can't download it. And if I re-release it, it'll probably be another couple of years. You're thinking, why so long? Because this is a bonus template. It's unadvertised. There's no downloads because it's not final. It's, in my opinion, still in the testing phase. It's in the ending of the testing phase. And the reason it takes me 2 years to re-release it is because I spend 2 years finding tune stuff. Peter talks about it sometimes, how he says, I'm behind the scenes for years testing stuff before you all even see it, because I want to make sure I take it through the ringer, all market conditions, up, down, volatility. I want to make sure I work out all the kinks before I release it to stuff. Unlike some of these scammy gurus, they have these, and I've bought their courses, these gimmicky strategies that worked in one small window in middle of time, 30 days, and they're like, oh, let me package it together and sell it to you. Then when you join it, it doesn't work anymore. I'm thinking of one in particular that was named after a sea animal. And I'm like, gosh, really? So
I was just going to say that because you and I both joined that one.
Yeah, we both joined. I'm like, really? So, and I was like, maybe it's just me. And it was like 100 other people who joined with me, and none of us could get it to work. I'm like, okay, it's not just me then. So stuff like that. So no, I don't want to be that kind of person. So anyway, so that was my little rant there. I'm re-releasing it next week. This is mostly
so dang difficult too. You remember how difficult it was to set up the charts and everything? And
it was. It was a pain. I broke one of my coveted rules: simplicity. Set it and forget it. Simple templates. That's my core. Set it and forget it. Simple templates. I don't actually have much for you. Most of what I'm going to talk about tonight is admin notes. But before I get to the next admin note, I forgot to talk about my interesting fact. I tried to say I'm gonna try to be more interesting. I forgot last week to give you all an interesting fact. This one is not really an interesting fact. It's just I'm depressed. I gotta talk about it. I told Peter, I was like, oh, as a matter of fact, my son that's behind me on this picture, the one sitting on my lap, is my oldest. He's a lot older now. He went away for camp. He's half Nez Perce, Native American. So his tribe has what they call a culture camp. They're trying to keep their traditions alive, where they learn language, you know, their tradition. So they go off with camp and for about 3 days. So I'm like, oh, this is the first time I sent my son away for 3 days. He's been away from us. So I'm like depressed. And I don't know how parents get used to it. You know, they're worrying about your kid and all the things that could go wrong. So anyway, just had to get that off my chest. As I told Peter, I was like, I can meet. I'm a little depressed, but I'll meet today. So that's where my brain is at right now. So I don't have much for you all today. I'm just trying to take it easy. But I am upset that the market is up. That's my second thing. I'm extremely upset. Peter's like, why you're upset? I was like, because I just placed some bearish trades yesterday, right? So the market closed. Now let me show you my screen again. So let me show you screen number 2 here. So the market had a price close below the moving average. And based on that, I went ahead and placed a bearish hedge. Bearish trade means I would have made a little money if the market kept going down. The very next day, the market decides to be up 1% plus. So yeah, I'm a little upset. I'm like, that's what I get. And I was telling him, I didn't place it based on the trade triangles. I placed it based on a moving average. But I did notice that yesterday when the market closed below the moving average, generally a red daily trade triangle will kick in. And it didn't. And I thought that was odd. I'm like, that was odd. Why didn't it kick in? So I was like, and I told Peter, I was like, I know they have some secret juju in the trade triangles. They're created based on the movement of institutional investors. So maybe the trade triangles knew that that wasn't a valid down move. I don't know. All I know is I'm losing money. I'm upset. So I was like, I'm going to make an emotional trade, a revenge trade. So I'm going to be completely honest. I'm not delusional what I'm doing. I'm not saying, oh, because of the technicals. No, I was like, this is a straight revenge trade because I'm ticked off. So I'm going to play some bullish trades here. And in my defense, I've been good all year. I actually haven't placed that many emotional trades and things like that. But I'm not a snob. I'm not against placing emotional trades. I do it every now and then, knowing full well that it's straight emotion is not prudent. I could lose money. And how I back this up is when I do those kind of trades, I don't risk a lot. I'll place an emotional trade, but I'll make sure, okay, it's an emotional trade just to get it out your system, Travis. But make sure you don't like try to bet like $8,000 on the trade, 100 or less, something like that. So that's some of the ways I it's like a emotional management trick for me. I'll get the emotions out by doing what I want to do anyway, a revenge trade, but I'll limit the risk to something like $100 or less. I get the emotions out my system, but I also make sure I don't ruin myself financially. So that is the best way to place an emotional trade. Same way going back now to our Pinterest update, the same way I told you is the best way to speculate on IPOs. I gave you a speculation blueprint few recaps back. I'm not going to talk about it again. I'm not going to tell you which recap. It was a showing up bonus. Those who showed up and watched our recaps, you got that template because I gave you the exact template. So now I'm looking at the results here. It's back up to 2,180% return on my money. So think about that. That's a speculation blueprint. This is the way I want you to speculate so that, wow, if this IPO you think will turn into the next Amazon does go up, you're in a position to make a lot of money. But if it doesn't, you don't lose any of your own money. So this is the way to speculate. Now, it doesn't always work out like this. Sometimes with those kind of things, marijuana, cryptocurrencies, anytime you're speculating on something new, you generally lose more than you win. And that's what a lot of people who speculate don't realize. People who are rich realize this, and I learned it from them. They say they might lose on 9 out of 10 of their investments. Those, what do they call them? The angel investors, I think. The people who get in on Facebook, Uber, and all that before they're public. I forgot what they're called. I'm having a brain cramp. But anyway, they say they will lose on like 9 out of 10 of their investments, but they only need one to really take off. And so they know they lose more than they make. So they always limit their risk. And that's what I did here. So yeah, I'm showing you this nice 2,000%, but it honestly doesn't work out like that all the time. But when it does work out, it's great. And I wanted to show you an example of what that looks like. All right. Next here, Starbucks. I'm going to actually pull up Starbucks. My next admin note here is Starbucks. I am actually in the process of writing a new book on the One Stock Blueprint, showing you how I can justify spending all my money at Starbucks every week. Showing you like, okay, if I'm making 40% a year on Starbucks, do you think that justifies spending money there? You think I'm okay spending money there? Versus the gurus who say, oh, avoid the lattes and you can retire a millionaire. I'm like, oh no. Robert Kiyosaki taught me, don't say I can't afford it, say how can I afford it? One is a shrinking goal, avoiding lattes. It's a shrinking goal. You're shrinking down. One is an increasing goal. You become a better version of yourself. Robert Kiyosaki says, no, say, how can you afford it? You put your brain to work. And I'm like, okay, how can I afford this $6 coffee every day or every few times a week? Oh, let me just find a way to invest in Starbucks, and trade it and things like that. And then my coffee's free because the money we make off of it is way more than we spend on coffee. And I get a chance to teach my kids how to invest. And so I'm going to write a book based on Starbucks and the trades we're doing, things like that. Most likely I'll do a course on it, only because I have a friend. I'm a horrible friend. I have a friend who came to me, and Peter's laughing because Peter would know this is just me. He came to me about investing, right? He's like, I'm ADD. I want, some quick weekly income and things like that. He wanted sexy strategies, the strategies where you're always busy, you're making money constantly. And here I come with my patience equals profits, that's not the way to build wealth. Wealth is built over time, not overnight, true spills, right? I didn't give my friend what he wanted, but I gave my friend what I thought he needed. Like, if you really want to build wealth, you just have to buckle down and just realize it's going to take longer than you want it to take. It's going to be harder than you think it will be, but it'll be so worth it in the end. Well, he wasn't trying to hear that. Most people aren't trying to hear that, right? I try to sell hard work. People are like, no thanks, Travis. I'm going to the guru who's promising me $2,000 a week. And that's what he did. He went and bought a course from a guy trading weekly. I'm not laughing at him, but I'm like, gosh, I tried to tell you, man. I was like, he's like, this guy said you can make weekly income. I'm like, it's something they're not telling you. I was like, they always make it sound like I said, that course we took about named after the sea animal, like they always make it in the sales letter seem so exciting. It's guaranteed weekly income. He joined the course. His very first trade, he was down like several $1,000s. I was like, I tried to tell you that. I was like, I bet you they didn't put that in the sales letter. What happens when it goes wrong? I was like, yeah, best case scenario, you can make this weekly income. But as you can see with your first trade, it doesn't always work out like that. So I agreed to help him because I was a first friend who turned him away anyway. I won't say it's my fault that he got scammed. Well, I won't say scam. Anyway, I don't know what you would call that. Deluded. I don't know. It's the word I'm looking for. But I said, all right, fine. So yeah, so he was sold. And I was like, well, did the guy teach you what to do when it goes wrong? Money management, all this? No. I was like, oh my gosh. So I was like, all right, fine. I'll help you, sort this out. Let me show you a better way of doing this. It's a valid strategy, but it has some flaws in it, the way the guy sold it. So anyway, all that saying is I'm going to help my friend out. I'm going to record it and make it into a new course. I'm going to help him out anyway. I might as well help other people out. I'm going to, it's probably going to be like a weekly cash machine or something cheesy like that because it is bringing in weekly profit. But I'm going to offer that to everybody here very soon. I'm going to probably pair it up with that new book and tie it into that. Lastly here, that was a very long admin note. New hedges. I share it with Peter, a new hedge that I came up with. I'm going to teach it on our next Success Academy live call in September. And the reason why is if you all watch my case study, my Journey to 100K case study, I talked about how my current hedges are. Let me pull up SPX, how, we have like, when we get into a correction, I place like short-term bearish hedges that will offset what I'm losing on my long-term bullish trades. Bullish means you make money when the market goes up. Bearish means you make money when the market goes down, right? So I try to bring in little spurts of income when the market's correcting. And then when it resumes its upward trend, I'm already have some long-term positions in place. Well, it's a lot of work, right? And you always have to be at the computer. You have to be watching the charts to see if it's a weekly. So I said, it's a lot of work. I'm going to see if I can figure out a better way of doing this. And I think I figured out a better way. So I'm going to teach the core of that on our next Success Academy live call in September. And I just shared it with Peter, and you can correct me if I'm wrong. Were you excited about seeing it?
Yeah,
All
it
right,
was
cool.
incredible. I was excited
All right.
because what's funny is that the part that excited me the most, because this is what you've brainwashed me into, which is this is a good brainwashing, is the risk was the first thing I saw. And we often overlook. As a matter of fact, I'd be willing to bet most investors never really focus a lot on risk. They only, okay, I can make this much money. If I buy Apple and Apple goes up to 218 bucks, I can make this much money. And they never really focus on, well, what if Apple drops to 120? Then what? So
Yep, that's what happened to my friend. It never. What did he come to me? He wanted to make money. Nothing in his spiel was about losing money. He wanted to make weekly income. You're right. Nobody ever thinks about the losing. I'm glad you said that. Now let me show you my Excel. That's why. Well, first, scatterbrain. Let me just keep on the same point before I forget. That's why I tell Peter that I'm a pessimistic investor. I place my trades assuming I'm going to lose. All right, so let me show you this trade right here. Peter's like, I'm not there yet. Here's exactly why. Yesterday, when I placed my bearish spread, I didn't think, it wasn't a thought process of the market's closed below the moving average, it's going to drop again, I'm going to cash in on this $3,600, right? And that's in this small account. And I think the bigger account is like $7,800 or more. Matter of fact, let me just find it. Matter of fact, let me just show you the big account because I got to show you the performance of this big account here in a second. All right. So anyway, so yesterday when I placed this trade, it wasn't going, oh yeah, it's 72. I was like, it wasn't going to make 72 or 25,000 here. It was, I am going to lose money, right? Even though I thought the market may fall some more, it wasn't of, oh, I'm going to make a quick 72 or 25,000. It was, I am going to lose money. And the reason I think that way is because, again, it always guards me against what takes people out of business, losing money. You've never heard anybody say I went broke because I made too much money. It's always because they didn't prepare for losing money. So I prepared myself up front. I said, I am going to lose money in this trade. So I need to be okay with what I'm going to lose. And so when I placed the trade, I made sure that I could lose around 2,400. That was profit I had just made the previous week on my first hedge. I said, I just want to risk what I've already made on my first hedge, which is about $2,000. So when I placed that trade, I said, I just want to, if anything, I want to give back the profit I just made last week. That's it. I don't want to give back any more. So luckily I did that because that trade is losing money today. But that's a perfect example of why I do that, because you never know when you're going to be, I don't always plan to be right because we have no control over that. But I do have control over it. When I am wrong, let me make sure it doesn't hurt me financially. And I don't know why, but I have found that that's the key to success. Warren Buffett talks about it, his 2 rules. People take them literally, but it's more philosophically, don't lose money. Rule number 2 is don't forget rule number 1. Is you always want to focus on risk first, profits second. Now, with that, I will end with this. I want to show you my performance here on the larger account. It shows 109%. So it shows I have doubled my account this year. This is an illusion. I've talked about this in a case study. It shows best case scenario. If all of my trades I have open right now work out, this account would have doubled so far this year, and we're only at August of the year. But book profit, this is guaranteed profit I've already taken off the table. I can't lose it. Book profit this year is 42%. So you can see that's a big difference, 42 and 100. So my current open trades, if they work out, it's going to be about 60% of my account value. So but the risk is awesome, Peter. I've already showed Peter a couple of examples of that. I can make $2,000, lose 200. That's why, yeah, it shows I can make 60% here between now and the end of the year, but I'm not going to lose a whole lot because the risk rewards are outstanding. It's what I call billionaire math, risk $1 to make 5. So I found some trades where I could risk $1 but potentially make 5. When you do that, you place a bunch of trades with risk rewards like that. That's how you become a billionaire over a span of 20, 30 years. You keep making investments like that. Getting rich becomes laughably easy. Now, with that, my voice is getting too raspy here. I'm going to have to sign off. Any final takeaways for everybody, Peter?
No, I think we covered it. Don't follow my advice. No, I shouldn't say that. I shouldn't say it that way. Don't follow what I talk about. We talk about educational purposes only. There's a reason for that. You don't know what I'm doing. I tell you snippets. Travis tells you snippets. Don't make decisions about your finances or investments based on a YouTube video, a free YouTube video. We don't talk about stuff that just isn't true. We talk about things we do, but there's a lot more that goes on beyond that. And for me, Travis has been doing it how long now?
Gosh, over 20 years.
Yeah, over 20. I got involved in his program back in, I think we figured it out because my memory sucks. It was somewhere in the 2010, 2011 timeframe, I think. I originally started following his free site prior to that and was doing some stuff, but that's how long I've been doing it. So, holy cow, that's going on 9 years, like 8, 9 years now.
Yeah, now you're going to have me keep talking. Now you're going to have me looking it up.
Sorry.
I'm wondering now.
Sorry.
No, go for it. No,
but the bottom line is we've been doing it for a while, and I haven't just been doing it. I did it based off of an educational system that's proven blueprint, because Travis's blueprints are proven. He has tons of students that are very, very successful when it comes to this. So, and I proved I proved that the blueprint is proven as well, because I use the blueprints all the time and my account's up. So even with the correction, even though I lost money on this last correction, I didn't lose as much because I did play some hedge trades, which gave me back some of my cash. So, but overall, I haven't lost money, which is good.
And where did you learn? This is not ego, but where did you learn those hedge trades from?
From you.
Well, from the training. That was the point I was getting at. It's
yeah. Well, you and the training are one and the same. So every time I talk about the Success Academy, Travis is the one that created it. He wrote everything. It's his stuff. It's based on his actual experiences and finding systems that actually work. And if that's why I talked about what I'm not doing anything right now. It's not. This market, this turbulent market, is not affecting me because I don't allow it to. I do own AT&T, which, by the way, is doing really well. I think my covered call comes due, or not my covered call, my cash secured put. It's going to expire worthless, so I'm going to place another one. That means I've actually, because I got assigned on my 500 shares. Mm-hmm. So I lost out on the dividend for those 500 shares, which was a couple $100. I'm gonna more than if this one expires worthless and I do another one, I will basically have quadrupled my dividend payment, which is why I'm rethinking my. I told Travis this. I haven't shared it with anyone else, but I'm rethinking my long-term financial plan. I haven't made a clear decision because there's a reason why I own AT&T.
Yeah.
Anyway,
talk about it.
But
all right, I found it. And the reason I say, where did you learn that from? Is because I want to tell people, if you want to learn it from a proven blueprint or a course or a mentor you're learning from, not some stuff you scoured online. Because like Peter said, there's always missing pieces you don't know about. So when you want to learn hedge techniques or any kind of technique, preferably under the tutelage of a course or some kind of mentor, because when you have questions or things don't work out, you want to have somebody you can reach out to that'll help you sort those out. You can't do that with the book. You can't. The author's not there that you'd ask questions. That's why books are supplemental, but they shouldn't be a replacement for mentorship. So to answer your question, Peter, you sent me. I don't know how long you were studying me before, but the first email I received from you, because I printed it out, saved it because I was like, something's about this guy. And even Bellama, my help agent at the time, noticed it. You sent me an email December 14th, 2012. And it was a long email giving your backstory and everything else, asking me to put on the wait list for the Success Academy. And Bellama put, gosh, where is it at? She says, your life and work ethic are really good, and Travis loves teaching students like you. So even she noticed it, like it was just something about you. We were like, oh yeah, this is going to be a good student. We're going to put him on the waiting list. So
that had to have been after I had done LearnStockOptionsTrading.com.
The free course, yeah.
Yep,
and I don't know.
That's how I was doing all of that before I reached out to you.
So that's why you said, okay, all right. So yeah, and so you joined the Success Academy. It must have been 2013. I'm not going to look up that receipt. So you have been doing it for a while, man. But Congrats.
Well, remember, I did your Udemy course first.
Before
I
you're
was
right.
one of your trial members. You were doing the Udemy beta course, and
Yeah,
that's how I initially kind of got into your program.
I do remember that because you won't let me down how blunt I was with you. You still talk about it 10 years later. He was so blunt to me. He's like, if I was somebody else, I would have flicked him off, said, go screw yourself. Yeah, I've grown more wiser and softer.
Hey,
So,
you know what? It worked for me.
yeah, well, thanks. I'm glad. All right, let's let everybody go. You all take care. Enjoy your month off from hearing us. We can't wait to see you in about a month with our next weekly recap. All right, you all take care. Bye bye.
So, yeah.